Welcome to This Explainer. So, have you ever looked at a financial chart and felt like you were trying to read a foreign language? Well, you're definitely not alone. But what if I told you that hidden right there within those modern digital charts are ancient secrets just waiting to be translated? Today, we're going to decode exactly how to spot really powerful market trend reversals using some of the absolute most fascinating tools out there, ancient Japanese candlestick patterns. By the time we're done here, you'll be reading the subtle shifts in market psychology like an absolute pro.
Listen to this. Soldiers are going to war to win, climbing a mountain. Now, that evocative imagery isn't from some old history book or martial arts epic. It actually describes a highly specific, incredibly powerful financial pattern that we're exploring today. It's this perfect metaphor that captures the relentless, victorious upward climb of buyers in a market. It paints a crystal clear picture of momentum and determination, which, is exactly what we want to see on our charts.
Okay, here's our quick roadmap for this explainer. 1. Candlestick origins and colors. 2. The 3 white soldiers. 3. The 3 black crows. And 4. Entry and stop-loss rules.
Let's dive right into Section 1, Candlestick Origins and Colors.
Way back before glowing screens and mobile trading apps, Japanese rice traders actually visualized market momentum using this exact candlestick system. They needed a reliable way to track whether the buyers or the sellers were winning the daily battle, and the system they came up with was incredibly intuitive. Interestingly enough, the vibrant green and red candles that we see on our modern charts, they were actually visualized as white and black in traditional Japanese charting. When buyers won the day and the price went up, the candle was white. When sellers pushed the price down, it was black. And we still use those traditional names today. That's why you're going to hear about white and black patterns, even if you're staring at a screen completely full of green and red.
Now, before we jump into specific formations, we really need to define our main objective here, which is catching a trend reversal. We're looking for that pivotal moment where the market completely flips its narrative. If the price has been steadily falling, we are looking for the exact moment the buyers mount a massive counterattack to send it soaring back up.
Which brings us to Section 2, the 3 white soldiers.
This first pattern is just a perfect illustration of buyers taking undeniable control right at the bottom of a charting sequence. This is exactly where that mountain climbing metaphor really comes to life. When the price has been trending downward, you want to watch for this specific sequence. 3 consecutive green or traditionally white candles forming at the very bottom. When you see this trio line up, one after the other, closing higher and higher each time, you're looking at a bullish army known as the 3 white soldiers. They basically scream that the downward trend is exhausted and a brand new upward climb has officially begun.
But what's super interesting here is the live market psychology happening inside each of those candles. Think about it. The price opens, and initially the sellers try to drag it back down. But then the buyers just surge right in. They completely overpower the sellers, pushing the price all the way back up to close higher. And then it happens again and again. Despite the sellers trying to push things down during the candle's formation, buyers just continuously overpower them to close higher 3 distinct times in a row. It's a really relentless display of strength.
But here is the catch. Watching those intra-candle dips happen live can seriously mess with your head. When that candle momentarily dips red before turning green again, traders start to doubt the reversal. It heavily tests the patience of folks who want to jump the gun before the pattern actually completes, or those who just get spooked and abandon the setup entirely. You absolutely have to wait for all 3 soldiers to finish forming.
All right, let's flip the script. Section 3, the 3 black crows. Using exact inverse logic, if we look at the absolute peak of an uptrend, we find the opposite pattern, one that takes us from a strong bullish climb into a sudden steep drop. This is the 3 black crows. Instead of consecutive green candles, this pattern is made up of 3 consecutive bearish red, traditionally black, candles. Just as those soldiers showed the buyers taking over, these 3 candles show sellers hijacking the market and aggressively driving the price straight into the ground.
The naming here is incredibly intentional, by the way. In both Japan and India, crows are often seen as a bad omen, which makes this the absolute perfect cultural metaphor for a looming bearish drop in price. When you see these 3 dark figures perched up at the top of your chart, it's a giant flashing warning sign that the good times of the uptrend are over and something bad for the buyers is about to happen.
And this brilliantly illustrates the dark mirror image of our soldiers. The candle opens, and the buyers, still hoping the uptrend is alive, try to push the price higher, but the sellers step right in and aggressively crush the price lower. This total defeat of the buyers repeats 3 times in succession.
It is a complete psychological collapse for anyone who is hoping the price would keep going up.
Okay, moving on to Section 4, Entry and Stop-Loss Rules.
Spotting those charging soldiers or looming crows is an awesome start, but it's really only half the battle. Now we need the strict mechanical rules to actually execute a trade and, most importantly, keep our capital safe if the market decides to be unpredictable. So first, there's a very important visual rule to keep in mind. The 3 soldiers or the 3 crows can totally be of varying sizes. One candle might be slightly shorter or longer than the next one, and that is perfectly fine. The critical requirement, the one you cannot break, is that no opposite-colored candle breaks their sequence. For the soldiers, you need 3 unbroken greens. For the crows, 3 unbroken reds. Seriously, do not compromise on this sequence.
Let's compare the two side by side just to lock this in. Soldiers signal a bullish climb, so obviously they must be found at the bottom of a downtrend. Crows signal a bearish drop, so they've got to be found at the top of an uptrend. But here is the real secret to trading them. They both require strict confirmation. You do not just blindly buy after the 3rd soldier or sell after the 3rd crow. You have to wait for the very next candle to prove the trend by breaking past the 3rd candle's extreme point. So here's your actionable step-by-step game plan. Number 1, identify the 3-candle pattern. Number 2, demand confirmation from that 4th candle. Literally let it close to prove the momentum is real and isn't just some weak doji candle. Number 3, execute your entry immediately after that confirmation close. And number 4, critically, set your stop loss. Never, ever trade without one.
Let's actually talk about where that safety net goes. Your stop loss is always anchored to the very start of the pattern. So if you're riding the bullish 3 white soldiers, your stop loss goes at the extreme low of the 1st soldier. If you're shorting the market based on the 3 black crows, your stop goes at the extreme high of the 1st crow. If the price breaks those foundational points, well, the pattern is invalid, and you want to be out of that trade immediately.
So, as we wrap up this explainer, we've seen how centuries-old metaphors brilliantly map onto live market psychology today. But the ultimate question is really about your own trading psychology. Knowing the pattern? That's the easy part. Executing it properly is hard. Will you have the disciplined patience to endure those live price fluctuations and actually wait for that critical 4th candle's confirmation before you make your move? Let that question guide your next chart analysis. Keep studying, stay disciplined out there, and I will catch you in the next explainer.